Welcome to our first of the Inside the Investor's Mind series. Together with us here is Mr. Jackson Setuba, Portfolio Manager at Shona Capital. You're welcome.
Thank you.
To Transformational Business Network.
Thank you.
We are a network of investors and entrepreneurs. We pride ourselves in 3 C's: capacity building, capital raising, and community engagement. What brings us here today is trying to understand what is inside the investor's mind. Entrepreneurs often have an appetite for capital. It's either working capital or it's a capital that is needed for expansion, OPEX or CAPEX. It's any form of financing that they need in their entrepreneurial journey. So what brings us here today is to get to understand what is inside the investor's mind.
Yeah.
Our audience today is comprised of entrepreneurs. Most of them are in the agri SME. So it will be addressed to largely the businesses in the agriculture value chains.
Okay.
You're welcome.
Thank you. Thank you.
Would you introduce yourself? Tell us about yourself and about Shona Capital.
Yeah. Thank you very much, Derek. It's a pleasure indeed to be here this very morning, and also to all our viewers. Thank you for taking your time. Certainly believe that this is going to be a valuable time that you're going to spend as you watch the podcast, and also for the audience that's already in the place. By names, I'm Jackson Setuba, Certified Public Accountant, Portfolio Manager at Shona Capital with 10 years of experience in finance industry, a couple of course, different capacities that I've managed to have. But also I've had great interaction with SMEs in Uganda for the past, I should say, 3 years.
Mm-hmm.
So, and in different sectors as well. Yes. Shona Capital is a Kampala-based firm that prioritizes and specializes in SME financing. Not only just financing, but also giving business support in critical areas. And for this, we are based, at least we've seen most of the areas where most businesses, SMEs to mention, have challenges is financial management, go-to-market strategies, market fit, and that kind of strategies, and then compliance. And in compliance, majorly, tax compliance. As you know, the taxman is always also trying to see how he can better fund the Ugandan budget, but as well, so the SME needs to be prepared, even when they are usually going out with a lot of cash in their bag, but to be prepared in terms of compliance and also again have this, have challenges along the way. Yes, and we look at, of course, growing and scaling businesses, businesses locally owned. That's the philosophy that we have. The philosophy we have is that we look at how we can improve and finance and help main street businesses grow and scale in such a way to help the economy also grow. So as Shona Capital, we have a proprietary fund that looks at investing in locally owned SMEs in Uganda, majorly the Kampala metropolitan region, but also now extending to Barara and Arua. And invest in the Ugandan shillings. But also we do fund management. We manage a couple of other mandates where we also invest in East Africa and Sub-Saharan Africa as well. Maybe as we go along, I'll be detailing each of them that they do. And we pride ourselves in what we're able to contribute to the businesses, not only just giving the financing, but also the business support, the post investment support. I am privileged to be part of actually the implementers of the post investment support, and we certainly believe that it's financing combined with business support. We can use it to grow the businesses, create more jobs, and make them more investors, more prepared for investment.
Right. Thank you, Jackson. You talked about something locally owned,
yes,
locally grown businesses. You also talked about the impact component. Now, these businesses that you fund, must be impacting.
Yes.
Could you talk about the impact?
Yeah.
What does the impact look like?
Okay. Maybe start with the local element because I think that's also very, very key.
Right.
Along the way, Shona Capital is part of the Shona Group.
Right.
And the Shona Group started off many years back, 10 years I should say, basically accelerating businesses
Right.
become more investable. But along the way, as the accelerations at the boot camps were happening, the business advisory is happening, realized the same businesses, you could find them in this accelerator, the same acceleration. And the common factor was they were locally owned businesses
Right.
that are still struggling to access finance.
Right.
Of course, other factors we always look at constrained businesses from getting access to funding, lacking the banking history, not having collateral. Then the turnaround times, again, of course, the documentation is so much required that certain businesses, small business management.
Right.
On top of that, it looked, and it still looks like most of the companies that had a Muzungu face fronted, maybe part of the board or part of the directors, they are easily attracting funding as opposed to largely locally owned businesses. So Shona as a group felt that we can play a key role here.
Right.
We also capital providers than just be a business that's accelerating businesses to become investable.
Right.
And that's how Shona Capital was birthed in 2019.
Right.
Started off with this proprietary fund, but also now also specializing in fund management. Focus on the locally owned businesses.
Okay, so this is the Muzungu factor.
Yes.
That businesses that had a Muzungu
Yes.
as part of their board
Yes.
were easily getting invested in.
Yes.
Do you think that's a bias that still exists
Yes, it does.
and a
It does.
deterrent to many businesses getting capital?
Absolutely, yes. It is. It is, and I think it is a two-way. One, there is so much trust. I mean, an investor who is a Muzungu really easily trust a Muzungu here who is doing something in Africa.
Right.
Because, I mean, they can speak the same language. The expectations can easily align as opposed to what a purely locally owned business perhaps could be. So it's one, a trust issue, at least a perception.
Right.
But also in terms of structures and systems and preparing the organization to be able to be investable.
Right.
You find where we have the Muzungu factor or element,
Right.
such companies can easily take off. Structures, I mean, there's a lot of accountability,
Right.
more prepared for financing, and actually also they get to know what kind of financing we actually need. But also it comes to the knowledge gap. I mean, most of these people will know the angel investors somewhere,
Right.
which connections you as a locally owned business that you cannot necessarily have. So it comes in that angle. The element of the trust element, but also the structure that this person can really put in, because they have the exposure, they have the experience around the level.
Okay, thank you. Can trust be built? Can
Absolutely.
structures be built?
Absolutely, yeah. They can.
That is what Shona
is now
bringing to the market.
Exactly.
That you don't need to have a Muzungu
Yes.
as part of the business.
Yes.
Because the things that will not brought a Muzungu on your business in order for you to attract capital,
Yes.
you can embed them
Yes.
in your business.
Yes.
Now that it still happens, what are some of the ways you would advise an agri-SME?
Yeah.
What structures do they need to put in place? You talked about accountability structure. What
Yeah.
does that look like?
Yeah.
And without accountability structures, how does that hinder an agri-SME from accessing capital?
Yeah.
How can an agri-SME build trust
Yeah.
to any investor
Yeah.
that they don't need to have a Muzungu on the board,
Yeah. For them to
and that
become
they can
investable. Yeah.
to become investable,
Yeah.
and that they can still get
Access.
access.
Yeah.
So how do you build trust?
Yeah.
How do you build structures
Yes.
in place
Yes.
to attract capital yourself?
That's a good question, Derek. Thank you very much. And I think this is the most interesting bit, possibly could be, of the conversation.
Right.
It is because I mean it takes because I mean I'm coming from somewhere. I have my resources. You understand your business. You've been in the business for the past 4 years, 5 years.
Right.
And it's so challenging that you come to me and all you have is the information you have in your head.
Right.
I mean, everything surrounds all around you. It's you who knows how much comes in. It's you who accesses the banks. It's you who knows who owes us, who we owe. Everything is structured to one person.
Right.
It becomes a very big risk. So when even for the investors as well, as they even putting in their resources, they are looking at risk management.
Right.
They are looking at how can we sustainably cause impact in the ecosystem.
Right.
No one would want to associate with a business that they have invested in. I've even flagged it everywhere. Everyone knows that Shona Capital has invested in this kind of business, and 2 years down the road, it's no more, and there's a lot of challenges around it.
Right.
And then, so again, when it comes again to scaling, I mean, everyone wants to get Shona Capital, the philosophy that we have. We support the mainstream businesses to ensure that as they grow, as they scale, become the MTNs of Uganda, Tampeko and all those businesses, we are supporting the economy of Uganda. So naturally, we are looking at the vision of the company. We are looking at the growth potential of the company, but also currently where you are and how you're looking this part about this vision. Do you have the structures? Are you able to accommodate the risks that come with it? Do you know what you need to do to get the next level? Do you even understand where you are in your life cycle as a business? Because it also calls for different I should say interventions. So literally as an investor, and when it comes again to agri-based businesses, it becomes actually again takes a bigger, I should say, someone is so intrigued to understand the dynamics. Because agri-based businesses, there's a lot of factors that affect the business. The business cycles are quite not normal, because again, most of the businesses are also dependent on climate. So for someone again to have a business that be more sustainable, you look at again, is your product more climate resilient?
Right.
So there's some of the things, and do you have that component within as you're looking at your risk management, as you look at how your growth plan, are you operating some of these things?
Climate smart agriculture.
Exactly, absolutely. We look at, do you understand your business cycles? Because as you're even sourcing financing, is it in tandem with your business cycles? You are getting debt where someone is making you pay monthly, yet you have quarterly inflows.
That is structuring
Exactly.
of the loan.
So implying
repayment.
Exactly. So implying even how you are sourcing your investment, your finance, your funds is going to be also inclined to what aligns with your business cycle. And a good for like Shona Capital, try to tailor our debt funding to also match with the cash generation cycle and cash flow patterns of the business. When it comes to the risk as a business, you understand the risks associated with your business. Elements of certification. If you're doing export, how are you looking at element of GAP, Global Agricultural Practice Certifications? How are you complying? Because today you're going to get your 40-feet container, put your survey destination, just to mention, it reaches the European market, and maybe half of it of 3/4 is not accepted because of a small ingredient. Now, in your business, are you looking back to growing a certain network of smallholder farmers? Where are you even engaged with them, possibly at a 3-stage model, from the element of the seedling to the element of getting to the real garden, to the element of the pre-harvest practices and post-harvest handling practices? Are you having that component? Because all this in some way or the other will determine your supply. It will determine what you're going to supply to the other person and how your income is going to come.
Right.
So look at the business also. How are you looking at risk as a business?
Right.
What mitigation plan do you have for the risks? Do you even understand the most critical things about your business that can push you to the next level or that can push you backwards or even out of business? I'll talk about structures. Who are you employing? What departments matter to you? What decisions you're making on a daily basis, at where you are. You need, even when it comes to marketing, people talk about marketing. I have a marketing budget, and when you try to sit down and try to look at their business operations, the kind of marketing I'm talking about is not what they need at that point of time. Someone needs direct sales kind of marketing interventions to convert fast sales, but they're looking at something which is broad as brand visibility, which is not take them long term. So all these things, as you're dealing with a business, when it comes to prototyping, it comes to product testing, you are still prototyping the product. Maybe you are doing agro processing. Maybe, let me say, you're having your lemon and doing lemon powder. You are still prototyping it, but you want to get it for the prototype, which is actually not suiting your inflows, not even started commercializing. Right. So how do you also look at these stages from the prototyping to the commercializing? Now I'm heading for growth or for scaling at what stage? So as an investor, we try to look at all this, even when it comes to structures, accountability, which is very, very, because at the end of the day, all the decisions you're making, they have a financial implication. Right. Are you monitoring what is coming in? Are you monitoring the cost of how you are funding the business? Are you monitoring what is coming back? When it comes to margin analysis, you are having, some people are excited when they see money coming to their bank account. I have an order with this exporter in Netherlands. I received another order with the UK-based, USA-based exporter who wants a 40 feet, and you're excited. You even go ahead and you have these orders anyway, and you borrow. Not even factoring in time, not even factoring in the logistics of the airlines. Perhaps you're going to use airlines, you're going to use maybe shipping. How does it impact your margins? And you find even the pricing structure becomes a problem, because somewhat you are pricing based on competition, yet you would have an option of premium pricing or value-based pricing, where you can definitely look at the cost implicated in the process of having the product to its final destination. And factored in the MOU, and you discuss and say, this is the value I'm giving, much as what the market prices have been like this, but when it comes to me, you're not going to find this value. But also, even businesses that understand their value proposition. It's not just about selling your product and market. And sometimes it's quite funny that a big percentage of entrepreneurs, if you look at them and try to make it better, more imitation. Okay. Some of them will do something from scratch to understand the value proposition. You do not sell price, you sell the value. So as an investor, I'm looking at all these factors, because if you cost and wrongly, you price wrongly. Okay. If you don't understand the business cycle and what you need and where your customer is, your persona, the person you're targeting is, you will market wrongly. So everyone is running to the supermarkets. You know what's happening with the supermarkets. You take your product here, it takes 120 days to receive the payment.
Working capital management.
Exactly. You're not even done working capital management. You are running after every order. Meanwhile, these farmers are dealing with smallholder farmers. You pay them cash, and the person where you're getting to the supermarket, you're paying 120 days. It's not constraining your working capital. You don't lose out on orders. You don't fail to execute. You don't compromise on your quality. Pricing. You price wrongly. You don't have enough margins. When you don't have all this factored in, even how you source financing, you want to know who to go to. Am I ready to go? Can I accommodate a loan of 100 million? Can I accommodate 2 loans? Can I accommodate a loan that only goes for 24 months? Or should I go for something that's more concession, possibly 60 months? Why should I get a loan of 3 years if I'm investing in an asset which is going to pay back after 5 years? What am I missing? Where is it going to constrain me? So all this, as an investor, you understand the business from the financial perspective. What structures do you have in place? And even if we don't have them in place completely, what are you looking at putting in place to mitigate the risks? How are you hiring? What are your value propositions? Do you understand your market landscape, your competitive landscape? Do you understand the compliance elements, what exposures that would come? And then the growth plan. You find some people are all over. For example, a better one. It's quite a harsh one, but allow me to use it. Someone is doing about 10 things, totally different things. They're not in any way associated with one another. Right. Okay, someone can say I'm in circularity, it comes to agriculture. So I'm trying to see that the wastes that come from the livestock I do biochar or do manure to feed into my maize plantation. And then from there, I also making mainly that I'm having black soldier fly to make some organic fertilizer, and then there's a lot of security within agriculture. I mean, the plant. If it's not that you find someone is doing something totally off, about 5 things totally off, and you wonder what's the strategic direction of this business? Where is your focus in this business? So also as an investor, look at the growth plan. What is the strategic direction? And then the understanding of the business. And again, when it comes to also this, is it only you as the director or the entrepreneur who knows your business, who knows everything about your business? And you know some people are also very protective. You go to an entrepreneur and you're trying to do, you're interested in their business. It looks, on the desktop appraisal, it's interesting. When you go down to maybe a site visit or to do a deeper due diligence or appraisal, realize it's only him who knows everything. He protects the other people. You can't talk to any other person. If he's not around, business cannot continue. And of course, sometimes there's an element of people, they believe possibly how they become profitable because of the knowledge gap in the market. You try to hide certain things for them to still scale on that. And then you find others, it's just that, I should say, they, for lack of a better word, they're just selfish to know everything about the business. No one can become competition from their very enterprise.
Does that in any way contribute to the lack of growth of the business?
Absolutely.
So, out of what you've said, I've had the need for structuring the business for growth, not just investment.
Yeah.
And one of the dynamics is that the founders of these businesses need to have a clear vision.
Yeah.
That is not pegged on what others are doing.
Yeah.
Copy and paste.
Yes.
But they are able to defend it.
Yes.
Number two, they have to build a structure around that vision.
Yeah.
And that structure comes with a team.
Yes.
That structure and the functional team.
Yeah.
At that.
Yeah.
That structure comes with systems.
Yes.
And structures that should manage that team.
Yeah.
That structure should come with understanding of the market.
Yeah.
Understanding of
the
regulatory authorities.
Yeah. Competitive landscape, yeah.
And the like.
Yeah.
I would like you to speak into, of all the things that I've highlighted, which one is the biggest danger to you as an investor?
Yeah.
Some others you can help and say, no, I can help you work on ABCD to get the investment.
Yeah.
But this one is a red flag.
Yeah. Actually, maybe also something that possibly I could have missed is an element of the character of majorly the director and the key management team.
Okay, when you say character, what do you mean? That they don't pay their staff? They don't pay. They don't pay the revenue authority.
It's a very broad thing, I should say. Even just dealing with integrity with your investors.
Oh, they don't separate the business money from the company money.
Yes, you find drawings. You know, some auditors are also very, very funny. They will just put drawings, a big amount in the cash flow statement.
You're using a very big word. Can you break it down? Because we are speaking to entrepreneurs. They are entrepreneurs, not CFOs.
Not to understand. Yes.
Yeah. So, what does that mean? Break it down.
So, separating the company resources from your resources.
Okay.
Whereby you can even to the level whereby you track what you put in. So most people do not track what they invest in the business.
Okay.
You went to bought a mixer, you just bought it and put it on the farm. You didn't even put how much it is to report how much you put in the business. When you have a need, and actually have a need, and what also most people don't even pay themselves a salary. You wonder, and they ask a full-time business, is that business they are doing, not any other source. So you wonder how are they surviving. So what that means, they will certainly pull from the business without reporting to see, as I pull these resources, where am I, which area of my business am I affecting? Because certainly you are affecting the business. But not even necessarily be taking from the retained earnings, you're actually literally taking from the capital that you're supposed to use, the working capital, all that. So it's very, very clear. And character, that's one of the areas. And it comes also to stakeholder management. There is a challenge of, certain entrepreneurs, from my experience, entrepreneurs are faster and so committed to paying bank loans as opposed to paying maybe loans from other funders.
Why is that?
Beats my understanding. Some people still have the mentality that as if most of it, when you have a connotation of impact fund, I think it's more of a grant, it's philanthropic. Guys, I thought it was a grant. I'm like, no, it's not a grant. We structured the agreement. It was not so big that we read every term for you to understand.
Right.
It's just being concessional and tailored to your need, because we've assessed your business, we've understood your business dynamics, and we want to have a financing option that is more, that's not going to strain you but enable you to challenge grow. Like people take it to be more, philanthropic. If I don't pay those guys, it's more of a grant kind of thing, because it forms an element of character. Because what happens is most capital providers are also sourcing money from somewhere,
Yes.
and sometimes also at a cost. So if you're not able to pay it back, or if you're not able to grow good portfolio, and one of the indicators is how they are paying back, how will you access more money this time next year? Because again, there are certain triggers for you to access the capital as you go forth. The element of also how you deal with your employees, not paying them, not respecting them, suppliers. Some of the things that literally things we do when we're doing analysis of the business, you can also just do I check around with your suppliers. I can just talk to the next day. I know your biggest supplier, this part of the supplies may be protein for you to make black soda flour.
Right.
Then I go to them, oh, how is everything? Do you know this company? Yes, those guys are not been paying me for the last meeting. Whenever I go to the director, the phones are off, he's maybe traveling, maybe he's in a meeting. When I use another phone, tell me I'm in a meeting, I won't call you back. So that's already flat.
Yeah. So part of your due diligence is it involves talking to the different stakeholders.
Yeah, because you want to understand how are they relating. Any business that's not relating well with its key stakeholders, for sure, it's just a test of
Right. So you linked character in one way or the other to financial management.
Yeah.
How the financial management, employee management, relationship with the suppliers, and all that. And how character plays a very big role in making the owner of the business to get investment from Shona Capital. Let's talk about the financial management bit that you talked about, that the founder of the business is drawing from the business,
Yes.
but he's not respecting the financial rules
Yes.
that a business should adhere to.
Yeah.
Let's talk about the financial rules, the financial dashboard,
Yeah.
the financial health of
Yes,
the
the
business.
financial health of the business. Because again, the thing is, you are in business, you're selling a commodity that also costed you to get to where it was at a sellable position. And not at all the money that comes in is actually money that is yours, or what we call net income, or that is disposable, money that you can use for other things. So the implication is from the proceeds or from what your sales revenue have come, there is a portion that you have to account for as capital, just a simple word to use. Then there's that what we can call, people normally call it profit, which is now literally your takeaway, which now can, and that takeaway also does not necessarily mean the hands of you, the investor, the director, but also it's cater for the fixed costs like the rent, the salaries, because for the salaries and the rent, whether you've sold or not sold, you're going to pay that cost. And it's now from this little profits that you have. Now, out of again those fixed costs, you remain with the takeaway, where you can decide either now to pay back in form of dividends to the other shareholders, or you can use it to pay your cost of capital in case you borrowed, that's now the interest component, or you can use it to reinvest. Now, if you do not have the discipline of one, having visibility of tracking how this money is coming in and where this money is supposed to be going and what it's meant for, you will lose the understanding of what exactly is your net income, or what we call the takeout income, that it can be used for further expansion, for reinvestments, for the likes of bonuses and stuff.
Right.
Another bit is when you just pull money out of the business, not even respect your accountant. He has written a lot of I owe you. Some of them have even been lost. I've been carried forward for 3 years down the road. You are literally crippling the business because you don't have the financial resources to scale up the business to another stage. You will forever be at that stage. Meanwhile, the market dynamics are changing.
What can an entrepreneur do to separate the business money from their own money?
That's interesting.
So that they are not all the time coming to give into the money, the income that is coming in, and assuming all this money is theirs.
Yes.
What you recommend they do so that they have the right structures and are structured to get investment?
The first simple thing I think to start with a bank account, which can, if you know your display may not really be, you may control yourself, do a joint bank account where another maybe co-founder or maybe someone from the board advisory board or a key staff also has access. If you sign off a check, all of you have to have consented. The element of cash book management in terms of monetary sales on a daily basis. You can just do a daily sales report on a daily basis, and also to know what portion is cash, what portion is on credit.
Right.
I always tell entrepreneurs a weekly meeting, and Monday is a very key way to start with. People do Friday, but everyone's doing the weekend, so there are chances they come back on Monday having forgotten. They're in a weekend mood,
right?
It's party mood. But Monday, kick starting everyone by Sunday they are trying to prepare themselves for the week.
Right.
Just to say, ladies and gentlemen, this is how much we sold last week. Part of it was cash, and there's a bit of where was this cash? Was it cash in the till? Has it been banked? Small rules. Or moving away from cash transactions. It's one of the things that has helped most entrepreneurs.
Right.
Because when you have cash at your exposure, we sometimes we're impulsive spenders.
Yeah.
You see the cash is there, so and it becomes and you are
and it's my money. I found it in business. Why should I not eat it?
Yes. There is a Kwanjula contribution. Someone has come spoken well. We've been good friends. I see the cash say, Dorette, get me something. And I hope there's no Dorette. So you get the point. But when it's cashless, and and again another challenge, most entrepreneurs or businesses have financial monies that are not operational. It's just a document. Actually, I always tell people, even the business advisors and the auditors and the financial, when you make the financial money for a consultant, try to make not you have to make 20 pages.
Right.
Make something tailored to the operations of the business and let them have a form of accountability. With it, maybe in their quarterly board meetings, something they can try to look at how we fare against our controls. So yes, having tracing visibility over the money that is coming in and where it is being deposited, so that the money is off you as a director of cash. You don't have so much access to the cash. Not only you, and what happens, you as a director, whenever you pick money, you park somewhere outside. You lower your window and you call someone, hey, to bring me some money. She will bring you the money. She knows very well you don't know how much you've been taking. She will also start with you. And it will be very hard at one point of time if you have a cash gap of 100 million to tell this is what I took as a business owner, this is what as a person who was in the queue or the managing the cash.
Because you didn't sign
it wasn't written anywhere. So even a cash requisition, such proper documentation, just to say I'm requesting for this for maybe we are buying some packaging bags. You sign off, just contact another person, just for visibility. If it is so easy for someone to access cash, it's very easy also to. The risk increases.
Right.
But if you put some, it's hard. It should be a little hard because the way it's hard to make that money, it should also be very hard for you to just use it. So a bank account where you're depositing your money, make some of the transactions at least Momo Pay, at least cash. Whenever cash is around, you expose it to team. Like team landing is where someone can really put as they're closing the week on Friday, they say, because we have Lumbe tomorrow. And my brother promised me 50,000 on Friday, on Sunday, but the Lumbe is on Saturday. So only takes 50,000 with me. in the hopes of refunding it on Sunday. The brother may not give you that money. Or even when he pays the money, might use for other things. You come Monday, the deficit is still there.
Okay, so there is bank the money.
Yeah, I try to ensure more cashless transactions.
Cashless transaction.
Yes.
Bank the money.
Yeah, because again, these reports can give you visibility of this. How
And put safeguards on how money is used.
Exactly.
Put safeguards
Yes.
or put structures, definitive structures, on how money should be coming to the business
And going out.
and how it should go out.
Yes.
That's number one. Number two, does budgeting help?
Absolutely, it does. So it goes up to start with the weekly budget,
Right.
where we now most people best practice advises that you do a petty cash. You differentiate your petty cash from the spendings. You know, on a weekly basis, we spend average 300,000 to buy a disinfector here, to buy this and this and this, and that's the seal. You do a budget whereby it doesn't need complicated accounting. Just someone to say we are spending on water, we are spending on toilet bills, we are spending on internet.
Right.
We put it together, and you as a director, someone prepares it, and actually every department puts in their name. That yes, we shall need transport to take this produce to this other person and stuff like that. Then along the way, disburse the money. Now, because you deposit your money in the central account, so you disburse on a weekly basis to say that this is petty cash, 300,000 has gone into a pocket. These days, we have also other platforms that people are using to manage their cash flow. I can mention some few companies: IoTech, ZenPay, other MomoPay, and all those ones for small disbursements, and it's fairly good charges. And the beauty is that also as an investor, when it comes at one point of time, you have your records. When you have been developing sophisticated financial statements.
Right.
But as sometimes actually we go to a level whereby we help a business to help them construct financials, because they have existing information. They have mobile money statements, they have their bank statements, they have a cash book in an Excel format somewhere where you can track and see what we can put together. So that can help. Now the budgeting element is also to enable you to track what am I spending on. When I look through the math, I budgeted for 300 every week, 300,000 every week. But why is it that ideally I'm supposed to conclude with around 1.2 by the close of the month, but I've spent 2 million? What came in? What are the dynamics? Because again, also it speaks to your spending patterns. It speaks on certain things, perhaps that trends, some things that are changing that you need to observe. Take an example: businesses dealing in fruits, and you've been selling fruit produce, mangoes, apples, all those things. And then you realize along the way, people have the tastes have inclined to more value addition. People want already cut, sliced pieces. They want more of a bigger assortment where you're putting grapes, you're putting an apple in one package, so you have to buy packaging, and realize actually people are willing to pay this much. So in your spending, as along the way, you are buying the packaging material, maybe what they call them, disposables. So when it comes to the end of the month, you spend 2 million. Only to check you've been buying disposables. Maybe you incurred so much on some other element for a gift that you made. You realize, guys, you don't only have to sell apple as an apple, but we can do valuation and actually realize it's more premium. We can even structure it in our price and part of our value, our revenue aligns. So because you budgeted, now you're tracking how you're spending against your budget. You know where your money is going. You know what you're spending. Money can even also make trends in terms of demand and differences. But yeah, very.
That's good. So, a business to get investment from Shona Capital, one should be properly structured.
Yeah.
And by that, we've looked at they should be registered.
Yes.
No more
business. Yes.
They should be paying tax, compliance.
Yes, compliance. Yeah. We have a team. Yeah, they can get a TCC.
Tax compliance.
Whenever we say someone is complying with the regulator, tax regulator, everyone thinks of pay.
Yeah.
But it starts with filing. Filing is just to break it down, is to declare this is how much I made in sales. These were my expenses in the month, and you declare on a monthly basis. Certain times, actually, as the business is growing and scaling, you find you might even have more claiming because you have more of input VAT as opposed to output VAT, because sometimes even your product is not vatable, or you're not, you're not selling that much to the tune of what you're putting in. So you can have something you can compensate for at that time when you start selling much, but you are again keeping yourself good with the tax authority.
Okay. So be registered, pay your taxes, and get a tax compliance certificate. Do they need audited books of accounts?
Yes, we do, at least depending on the number of years you've been in business, operational. And we understand sometimes you might be a process as you're taking on an audit, or by at least you have financials. We have a team of experts who can look at also the business operations, look at the financials and say there's a gap, there's a gap. Besides, that's where we want to get you out to become better. Yes.
Good. So then the other one is they must have a product or a service they are offering that they're exchanging for value. Someone must be paying for it.
Yes.
Is a growth plan important?
Growth plan is important because as our philosophy is to support growing main street businesses, become also possible. So the growth plan that you're doing, we don't want to finance a business tomorrow and it's not going to be existing.
Okay.
And that's why sometimes allow me use also these tenderpreneurs. Might be hard for us again to engage with. Tenderpreneurs are these people who, according to my understanding, who can run for any tender. Then they are in road construction, the next day they are in plastics, the next day they are stationary, everywhere. So you realize they don't have direction. They can choose to get their money and go do totally different things. But I want to have a business that we can track along the way and say, you know what, we've been in this business for 7 years, from prototyping, commercializing, now they are scaling and they're growing. Years. Even when we exit the relationship, but we have a reference point. We have learnings, because we're still learning the ecosystem.
Yeah, so thank you. Business plan?
Yes, it's very key.
It's very key. A pitch deck that talks about what you do, and it should have a section of the team to show capability.
Yes. And I manage the growth plan. And actually, pitch deck, it sounds a fancy word, and I think it applies majorly to the Gen Z. So people of my age and beyond, pitch deck we used to business plans. But a pitch is just something that can talk about what you do, why you do it, how you do it, and how does it cash in.
Right.
Yes, and of course the management team to say this is my team. I actually understand there is a gap here, but my staffing plan, I intend maybe around these years, if I get this resources, I also be able to have someone in this direction. So we really understand, okay, you know where you're at, you know your value proposition. Because again, once you understand your value proposition, it's what actually should be the trigger for how much you are earning. If you don't understand what your value proposition is, anything you can go any direction. And if you're not committed to it, actually, so most people also get into a trap of where they get into funding and most automation may sometimes grants, and they incline themselves to what the demands of the investor is, and they leave their core business.
Mission drift.
Exactly. So even you lose strategic focus, and 5 years down the road, you're wondering, who am I? Where did I start from? How can I continue?
You got lost.
Totally.
Money makes you get lost.
Exactly. So it's this guy. So the growth plan is also very key. The team that will manage the growth plan, an element of traction. To mention, I started off with this. Currently, I'm 3 years down the road. I'm able to. I have about now 3 people full time. I rent now I have an office. I've been able to buy a truck that does the deliveries, route sales, perhaps. I'm able to have some plant that does the processing of my things, maybe a dryer, something. You're talking about where you come from, what you have currently. You're giving someone a story that, okay, this is what it lacks, and surely, should I get it from your support, I'm able to reach this. So also the projection, fraction of them projections. Right. And when it also comes to impact, because again now you realize that most of the investors are coming with this element of impact.
Right.
Basically looking at the livelihoods. For Shona Capital, you're looking at bottom of the pyramid, looking at livelihoods.
Right.
You're looking at job creation. At least in your business, you should be able to tell us that, okay, I'm able to get 5 direct, with this finance, I'm able to get 5 direct jobs. And indirectly, with the smallholder farmers I'm working with, I'm able to get more jobs like this. And it's something, some of these things actually are already inherent in the processes. Only that sometimes as we commercialize the business, we don't focus on them.
We focus on how much you can keep.
Exactly. But you realize that in some businesses,
not how much you can help others.
Absolutely. Sometimes you realize that in businesses, I look at the business and I'm able to see, we don't be tracking it, but they have it within their business operation. I'm able to tell you, when you look at you, with the smallholder farmers, if you're able to give them maybe $10 a season for a kg of their coffee, that's what the earning. You are giving them sometimes post-harvest handling process training. You're also giving them ready market. To mention maybe some of the people are dealing with fruits where they would have gone bad, fetched to very bad prices. You are coming in to do aggregation, to aggregate that. You're giving them market, you're giving them more training to help them become more compliant. GAP is Global Agriculture Certification compliant. So you're helping them. That's impact. And now along the way you can start tracking. Because again, at the end of the day, if every investor comes in with that commercial traction and also impact fund. So for you to be more investable, you need to be able to track down that and have it in your story.
Okay.
Yes.
So there is the element of now elevator pitch, storytelling.
Yes.
That the entrepreneur, they should be able to package themselves in this slide deck, this pitch deck.
Yes.
To present to you. So just for summary for our listeners, our viewers, is for you to approach Shona Capital for funding, you have to be registered.
Yes.
You must be paying your tax, and you must have your tax compliance certificate. You must have a growth plan.
Yes.
You must have a business plan.
Yes.
You must have a slide deck, otherwise known as a pitch deck, which talks about your story, where you started, where you are, and where you're going. And you must be a person of character.
Yes.
That you must be in good standing.
Yes.
We would like now to open this up to any questions that you might have.
Entrepreneur, like since you do loans, like someone has had loans, like for example, maybe gone to a financial institution and they got a loan. The willingness to pay was there, but then the conditions under which they received the loan, they were not able to pay to pay right. For example, probably someone applied for, let me say 5 million or maybe like 30 M, and through that analysis and all, they weren't given the amount they felt was necessary for them. And also to make it was not given at the right time. Like you apply today, then by the time even you need the money, it is 2 months late and they give you, and like just everything is just a mess. Then
That's the point. You need to realize you know those ones will take us.
yeah, so yes, you're in a danger time. You receive the money, but payment is hard. But anyway, you go through it, but of course not well. So this is the time someone wants like now another boost, maybe from like Shona. How do you deal with such a person? Because you have to do background check, and definitely it is going to be bad because payment history is bad. So how would you deal with such an entrepreneur?
Potential.
But potential is there. Yes.
Yes, in part of our analysis, of course, we look at the payment history. Of course, normally the CRB comes in and we check for those that we can track on the CRB. And we are able to see how many days you went, the installment went overdue, and for how long. So we don't just say, this one is already cut off. We want to understand what happened. Why is your CRB not looking good? So you will, of course, we will explain to us your story. Then we match it with the business history. If you have actually your books and you're able to prove, you know what, this month there was this, I had the contract to supply maybe food supply, maybe confectionaries to what they call that, petrol stations, and as they are returning their systems, they wonder my contract was cut off. He was a substantial customer, and I struggled, but I finally got the money and paid. So we shall be able to know that even your revenue went down, and it's not something that you are to some risk you didn't manage well before, but now you look at even diversifying your risk, your revenue potential lines, or maybe customers don't be exposed to one substantial, and we can prove it, because I think there it becomes an element of the ability to pay then and the character. Yeah, you find someone even on their personal phones, there's a 5,000 not paying for 80 days. They took some 30,000 this other line. They went to another fair, it was also calling them. There you can sense an element possibly of character. And some of those people actually not even disclose to me some of these other outstandings. In the initial conversation, say, no, I had only one loan, an overdraft. But when you check the phone, it's dangerous. So we check with a way ability to pay, and actually now are you able to pay? Because that's been a next question. You weren't able that time and everything was okay. Now are you able to accommodate it, or you are position yourself for more problems?
Okay, thank you, Shona, for a very, very intriguing and presentation in terms of what you support as businesses. My question is about the youth activities that you fund. I would like to know much more about what you fund, because when you look at most opportunities in Uganda for funding, they look at established programs, and these are normally managed by the adults in brackets, okay? But when you look at the youth, they are the energy, they have the interest, and I think they have realized that they need to contribute to their development and their growth. But when you look at all these conditions that you laid out, I can see that either I can summarize that they are not ready for all these conditions, and they may need somebody, an adult or somebody who is already advanced, to organize them, mobilize them. So from your experience, Shona, what are those, either from other countries or from Uganda, is an example of the experience of a project that you have done and is doing quite well that we can learn from? I think that would be a very good starting point, because there are very many youth out there struggling to start something, but they are normally challenged along the way. And yet they are a very huge market. They are the energy, and if these conditions that you outlined and Derek have discussed can be tailored to their situation, I think we can make a multiplier effect for the youth across the sectors, especially around agribusiness value addition. You look at the bees, for example. You look at the rabbits. You look at the local chicken, or look at little things which the youth can do and are capable of doing. But when it comes to that long list of formalizing the business, the tax compliance, I'm looking at the average youth or average youth group who are already doing something, but they cannot break into those conditionalities. The network, the what, you know, it's as if the description is for already strong businesses, but for the youth, they are there and they are willing to learn. And actually, once you succeed in mobilizing them, they can be a very, very formidable force to support TBN, support Shona, and to see the change, because we are empowering a group that is the future, if I might say. And we don't need to really disadvantage them because they are not yet there with all these conditions. What do you have to contribute.
Thank you very much. And I think I will take it to the particular funds. The proprietary fund, if it comes in terms of geographical scope, it's Kampala Metropolitan, Mbarara, and Arua. But also this means, take an example, a business is in Buwere, only missing Mbali. It has maybe its offices here or branch here. It's a business you can look at because the element of representing this company is very, very key. Of course, our intention is also to move other areas, but as we're managing risk, remember, risk for us, risk management is very, very key for us to be able to have good portfolio, secure most of, not secure loans. When it comes to the sectors for the proprietary fund, we do other all sectors except construction and then education. Yes, education. Construction, it's project based, and you know the challenges around construction. And most of them need actually more bigger ticket sizes, but also more patient capital. Then education, unless if it is such an exciting curriculum, something unique that the school is doing, but we won't go into that for now. When it comes to the fund mandates for SFF debt facility, it's basically 5 sectors: agro-based businesses, financial inclusion, renewable energy, manufacturing, and youth employment. So healthcare, we cannot do anything outside of that bracket. We cannot do, and there has to be an element of impact. In terms of geographical scope, it's East Africa and Sub-Saharan Africa. So we already have portfolio in Rwanda, Uganda, Kenya, Malawi, moving into Tanzania as well. Zambia, we are already over there, but of course, element of currency risk and that to scale down a bit. Nature, in terms of the geographical scope, it invests in Ugandan businesses and Kenyan businesses, and it invests in the local currency. Ticket sizes go up to 50K. $1,000, so the equivalent of that in the local currency. So it can go from 10,000 to 50K. And that's based purely Kenya and Uganda for agroecological businesses. There are others which have been smaller generation foods, more of agriculture as well, but that is more actually Uganda all through generation food, basically those are of course those that beef up food security. Very small actually. Yeah. So yeah, I hope
Yeah, thank you very much.
Okay, thank you so much. It's been a wonderful 1 hour getting inside the investor's mind. Our guest today was Shona Capital. Thank you, Mr. Jackson Setuba.
Thank you, Mr. David,
for allowing to share with us about the criteria that Shona Capital uses to invest in the businesses and the different financial packages that you have available for our entrepreneurs. Reach out to Shona Capital, reach out to us, we'll be able to get you to Shona Capital, or you can reach out to them. If you even tell them that you are from TBN, then it will reduce on your turnaround time, we believe.
have an edge.
Yeah, because there is an edge because of the agreement that we have with Shona Capital. Keep on asking your questions through our WhatsApp group, through the comment button. We will be able to answer them, and be on the lookout for the next episode of Inside the Investor's Mind. Thank you so much. Don't forget to like, subscribe, and share. Until next time.